Boom! What's up, Investor Maniacs? Your boy Knight Rider here, and it's time for your Robinhood Weekly Stock Market Recap. Last week, the Dow Jones dropped 1.53%, the S&P 500 0.99%, and the Nasdaq 0.79%. Bitcoin dropped 9.21%, and the 10-year U.S. Treasury ended at 1.56%. Markets suffered their third straight weekly loss, blame growing worries of a global economic slowdown, in part thanks to the inverted yield curve, which has everyone yelling, "Recession!" So let's talk about it. An inverted yield curve is when a shorter duration U.S. Treasury bond pays a higher interest rate than a longer duration bond. This usually shouldn't happen as you have your money tied up for a longer period of time, therefore you should demand a higher return. But this does happen occasionally. There's a bunch of reasons this can occur, but they pretty much all mean the same thing. Investors think it's about to go down. Okay, about to go down. I mean, we're talking like the economy, the stock market, about to go down. In anticipation of a negative long-term outlook, investors cram into longer duration bonds to protect their assets, thus driving the interest rate down, that's supply and demand, below that of a shorter duration bond. Some investors are worried about a hard Brexit, which may result in a worldwide economic slowdown. Other investors are worried about an anti-business Democrat being elected, particularly Elizabeth Warren or Bernie Sanders. And if you're an investor and Bernie Sanders is elected, you too might feel the burn. Others are worried about Trump being re-elected, but not resolving the trade war with China. China. Regardless of the cause, every U.S. recession has been preceded by an inverted yield curve by 22 months on average. So should you cash out and run? Not so fast. On average, 1 year after the inverted yield curve is triggered, the S&P 500 is up 12% and doesn't start posting losses until about 18 months after the trigger, only 4 months before the recession begins. So the inverted yield curve is bad, but shouldn't trigger any immediate panic. But if after some thinking, you still decide that you'd like to take a little money off the table or move into some lower risk stocks, I wouldn't blame you, particularly as valuations are somewhat high right now. Who's up for the week? Southwest Airlines was a top buyer of those troubled Boeing 737 MAX jetliners. And since they're all grounded, at least until November 2nd, Southwest has to get a little creative in ways to drum up business. So it's adding a bunch of California to Hawaii flights, some for as little as $99. There's not as much competition on this route, growing tourist appreciation, and investor approval. So shares popped 3% on Friday. Up next, while the rest of retail's bumming on tariff-boosted prices for that made-in-China stuff that American consumers love so much, Walmart is focused on food that mostly doesn't come from China. The world's largest retailer cherished a better-than-expected $130 billion in revenue last quarter. FYI, that's so much, it's almost double the second biggest company in America. But the real highlight was grocery. It now boasts 62% more online grocery shoppers than its next closest rival, Instacart, which is private. Walmart grocery is on fire. And I personally am desperately waiting for Walmart grocery delivery to be available in my zip code here in Orlando. Walmart is a buy. Buy. Up next, third time's a charm? Snapchat's first 2 attempts at a wearable didn't work. The $130 and $150 spectacles to record your every disappearable moment cost the company $40 million in wasted frames. Now it's trying a third time, and these glasses are $380. It thinks the high-end look and 3D focused filters could move the needle for Snapchat. Personally, I'd recommend you wait for some positive data before pulling the trigger.
Don't buy.
And who's down for the week? Shade Throne, the guy who first reported the lies of Bernie Madoff and Enron. He is now calling out GE. That's right, fraud investigator Harry Markopolos claims the 127-year-old American icon company is hiding $38 billion in losses from their books.
You're fired.
GE believes Harry's just trying to manipulate its stock price so he can profit personally, but shares fell a whopping 10% the next day, although they've almost completely recovered in the subsequent days. If you are invested in GE or are planning to invest in GE, I would strongly recommend reading Markopolos' report, which you can download at gefraud.com. Up next, Macy's had a fashion miss. Those are their words. The stock dropped 18% after a series of mistakes that made an already brutal situation worse. Its new private label athletic line got no love, and it didn't sell enough warm weather goods this spring, and there aren't many tourists in America going shopping anymore. That has all forced Macy's to put way too many clothes on sale, which dropped profits 48% year over year.
The House of Pain.
Up next, Overstock.com. I'm not sure if I'm supposed to laugh or cry at this next story. Last week, Overstock issued a press release stating their CEO, Patrick Byrne, that's the dude on the right, was dating this chick on the left for 3 years, and she ended up being a Russian spy who was allegedly trying to interfere with the U.S. presidential election of 2016. Byrne's statement is also a bit odd, to say the least. He at one point said, quote, "It was the third time in my life I helped the Men in Black." I think he might be confused with what type of alien his former girlfriend was. The stock dropped 29% on the news. Now, I am not a fan of Overstock.com and do not recommend it. Revenues are flat since 2015 and they are losing money. But if you like Overstock or if you trade news, I would consider this a buying opportunity. I do not believe this news is worth 29% of the company. This is an overreach. Up next, cannabis's biggest week of the summer is a major drag for pot investors. Drag. Cannabis stocks enjoyed their busiest week of the summer. Two of the biggest publicly traded pot companies revealed their earnings from the last quarter, both showing you that it's hard out here for investors when you try and put your money in the pot. Tilray is down 27% last week and a few percent more this Monday morning. The Canadian cannabis icon sold 5.6 thousand kilos of weed. That's triple what it sold last year, but its losses also doubled. It acquired hemp-based food creator Manitoba Harvest and more recently treated itself to a CBD candy company. Canopy Growth dropped 14% last week and a few more percent this Monday morning. Earth's biggest pot producer sold a hefty 9,000 kilos of weed, with revenues almost quadrupling. But its losses are also spiraling, having more than quadrupled the losses. This coming roughly 6 weeks after Canopy fired their co-CEO for underperformance and a failure to move quickly enough into CBD-infused drinks, at least according to Constellation Brands' reasons, which effectively they control Canopy's board and therefore who is CEO. Perhaps the firing of the CEO for underperformance should have been an indicator to sell the stock ahead of the quarter. Cann Trust shares hit an all-time low after authorities seized some illegally grown cannabis. And Sundial Growers recently IPO'd, but was caught with pot with mold. Perhaps worse than that, they didn't disclose that information during their IPO roadshow presentation. If you can't trust the information you're receiving, you should not be putting your money in that stock. The takeaway? Weed profits won't come for years. Canopy's CEO admitted that it could be a half a decade before it's profitable. So, some pot companies are shifting their geographic strategy to find some much needed profit. The US opportunity is huge, but limited at the same time, as only 11 states plus DC have legalized weed. And even legalized weed in those states is subject to change with a random 2 a.m. Trump tweet. And by the way, drugs are bad. Okay. Don't do drugs. Therefore, the market is mostly limited to hemp-derived CBD creams, oils, drinks, and apparently giving it to your dog in America. And then Canada, that's a different situation. They have an oversupply problem. It's legal up there since last fall, but there's so many people producing so much trying to get in that market. They have so much dang pot up there, they're trying to sell it to Santa. Oh. That's some good stuff. Christmas might come on the 26th this year, kids. Therefore, Tilray is building a new growing facility in Portugal, and Aurora recently announced a deal with the Italian government to supply medicinal pot to their people. I recommend you stay away from the pot stocks, but if you insist, I would go with Canopy Growth. That's it for this video. Hey guys, I'm trying my best to help contribute some high quality, entertaining investing content to the YouTube community. If you would like to support that effort, I would really appreciate it if you subscribe. Have a great day, guys.